Wednesday, Thursday, Friday, lower each day. Even if we spike Monday, which is my video from Monday morning, even if the markets go up Monday, I told you, Tuesday and Wednesday, we would sell off and we would be at a lower point than we were at Friday's close. And guess what? If you watch those videos, whether it was Fridays, Mondays, Tuesdays, it was correct. So let me tell you what we were expecting from the Federal Reserve. They said they were going to come out with 3 to 4 rate hikes between now and the end of the year. Now that was implied. Wall Street thinks 3. The fourth one is about a 60-40 chance. So let's just assume it happens. Then they were saying 25 basis point increase, which is the interest rate. You know, I like to watch the 10-year. So as the 10-year goes up, after the Fed spoke, the 10-year spiked 12 basis points. The US dollar spiked like 0.40%, and it's been going up every day, which makes it more expensive to invest in our markets. So I was expecting the Fed to catch up with it and say today either they were going to start the first raise today of 25 basis points, or second one would have been it's going to happen in March, which it is, and they would raise it 50 basis points so that the market can kind of settle down. Instead, what did they do? They said, yeah, 3 to 4 rate hikes. We'll start the first one in March at 25%. Exactly what Wall Street wanted to hear. So what happened is the SPY spiked a whole 2 or 3 points right after the Fed came out. So at 2 o'clock, 2:05, it's spiking. Now I tell you all to zoom out. So I'm going to share my own transparent story. I was set up for the SPY to go down today. I love that the SPY went down to 430. In fact, this morning I was in $442 puts. That was the strike, 442. And I paid $3 for them, $3 each. And I had a lot of contracts. So when it goes down to 428, those contracts are worth $1,400 a contract. I paid $300 a contract. It's basically 448% I would have made. I had slightly over $10,000. So I would have made about $45,000 to $46,000. But wait, I zoomed in and I said to myself, Matt, it's risk versus reward, and you teach everybody to be a little smarter. So what did I do? I sold these and I went into UVXY calls, which are like a similar instrument. It tests volatility. If the SPY collapses, the UVXY spikes. And I said to myself, all right, and the best thing about these, whereas my SPY puts expired today, more risky, my UVXY calls went out till Friday. So the Fed comes out at 2 o'clock, says everything that people think they're going to say. Now, it changed later on because we're talking about the Fed's balance sheet and they need to taper, which is reduce their spending, and lighten the load, which means, reduce some of their assets. Think of it like you have a garage, you own like 10 cars, and someone says, hey, clear out half your garage. So the Fed is saying, hey, we're going to clear out a bunch of our balance sheets, meaning putting it on the market. So more supply, less demand, price goes down. Price goes down, market goes down. So the positive reaction, and what happened? I scare sold. I scare sold my options for the UVXY calls, and I actually took a few percent loss instead of like a 50 or 60% gain, even more because the UVXY spiked to $19. And again, my calls were $15.50 calls. I paid $1. So 16.5 was my break-even point. It spiked to 19, making my calls worth $3.50 or $350 per contract. I paid $100. So that's a return of 350%, which is why I'm so upset about myself. But I told myself, if I can share my story and these people look at me, instead of saying, wow, what an idiot, because that's how I look at myself right now. Terrible mistake today. I went from being up 53% this morning up until 2 o'clock, and then my accounts dropped literally about 16%. So I trade multiple accounts. So all combined, I was up 53% between like 5 of them, the ones I trade options on. From being up that much, I went negative on the day, 16.62%. And I am just so upset about myself. So, but if you guys can pick up a lesson from this, here is the lesson. At 2 o'clock, you can't go with the first inkling. Same when earnings come out. Tesla came out with earnings after the bell. What happened? By 4:15, Tesla was down 5% after hours. It was down below $880. What happened? I still had my UVXY calls. I saw this happening and I said the market's going to be ugly tomorrow on Thursday. And you know what? I sold my calls because you can sell or buy calls in the UVXY up to 4:15 p.m. What happened shortly thereafter? Tesla reversed at 5 p.m. It was basically flat. The UVXY is down 3.5% now. So I will tell you what's going to happen in the SPY. The SPY will fill this gap by Friday. You're going to see 442 on the SPY by Friday. Right now, the SPY is 433. Okay, after hours, it's 435. So it's 433 though. Let's say 435. I'm telling you, by Friday, you're going to see 442. Now, what happens or goes in conjunction with that? UVXY will go down. So I don't know where it is right now. I'm going to say it's at $18.50. I think it closed at like $18.64 or $18.50. It's going to go down in the 2 days when the SPY goes up to 442 and the markets calm down. The UVXY will go from 1842, I'm going to say $15.95, just under $16. So again, the puts that I had would have yielded, oh my God, because I had puts going into close. The ones that I sold, what were they? Oh, geez, I wish I remembered what they were. I know that I sold them for $1.30. I know I paid like $1.50 something for them, and they're probably going to be worth close to $3. Meaning, instead of making 130%, I ended up sucking up like a 10% loss. Another reason. So I was a great trader until 2 p.m. today, and then I let one bad trade influence a second bad trade. And then I pulled the plug, not giving myself enough time to be correct. So these are all lessons that I provide in other videos. Have a great day trading.